Welcome to RPRA's consultation on the proposed 2026 Blue Box and Hazardous and Special Products HSP program fees. My name is Julia and I'm a communications advisor here at RPRA, and I'll be your moderator for today's session. In this webinar, we will communicate the proposed 2026 fees for the Blue Box and HSP programs and how RPRA develops those fees. We'll be pausing during the presentation to answer questions, and we'll take more questions at the end of the session as time allows. To ask a question, please use the Q&A tab, type your question, and hit send. Everyone can see the questions, and you can upvote any question you want us to answer first. We'll do our best to answer as many questions as possible during the webinar, but if we don't get to your question, please email us at consultations@rpra.ca. Please note the session is now being recorded. The recording and presentation slides will be emailed to everyone here and will also be available later today on our website and YouTube channel. Now I'll hand it over to Stacey Bowman, Manager of Policy, Research, and Data Analytics here at RPRA to begin the presentation. Thank you.
Thanks, Julia. Welcome, everyone. Thanks for joining us this morning. I'm going to give an overview of RPRA for those who don't know about us or who need a bit of a refresher. A bit of an overview of our fee setting process and methodology, a bit about our mandate, and then we'll pause for questions at that time. So first about us, we're the Resource Productivity and Recovery Authority, RPRA. We are a regulator mandated by the Ontario government to support a transition to a circular economy. We do that by winding up and transitioning some waste diversion programs that are legacy there. They're currently governed by the Waste Diversion Transition Act. And we enforce a new producer responsibility framework, which is under the Resource Recovery and Circular Economy Act, the RRCEA. We also are mandated to provide digital reporting services, registries, for Ontario's excess soil and hazardous waste programs, which are under the Environmental Protection Act. And we also publicly report on the progress towards a circular economy in Ontario by reporting out on data that we obtain through our registries through these two mandates. It's also important to note that because we're an administrative authority of the Ontario government, we don't receive any government funding at all. We fund our operations solely through the fees that we are consulting on right now, which are charged to regulated parties to recover the costs of delivering our mandate. So the fee proposal that we're talking about here is provided for information and so that you can provide us with feedback on the proposed 2026 Blue Box and Hazardous and Special Products program fee rates and fee models. We always propose our fees in advance of the year in which they will apply. So these are fees for the 2026 program year. They will be posted on December 1st. But won't take effect until January 1st, 2026. We do have our 2026 budget approved and solidified. You can find it online. It's a part of our 2026 business plan. And we'll be providing some key financial information from that budget as part of this webinar. And that should give you some contextual information that will be useful in formulating feedback on our fee proposal today. So we have a pretty set consultation process. We are required by the RRCEA to consult on any fees for at least 45 days. We're in the middle of that consultation right now. And again, those final fees will be posted on December 1st, which is a little more than 30 days before they come into effect. The consultation began on the 29th of September, and you can submit feedback to consultations@rpra.ca anytime until November 13th. Which is the close of our consultation period. There is a recording of this webinar that will be posted to our website by the end of today. There are also other recordings of other webinars up there for other fees for RPRA programs. So you can look at those if you're interested. Upon finalizing our 2026 fees, there will be a consultation report posted to our website. In that report will be a summary of all the feedback we've received during the consultation period, and also how RPRA considered that feedback. And you'll find that consultation report again on our website on or before December 1st, and you're going to be notified of that posting as well. Lots of information on the consultation webpage, great resource for you throughout the consultation. So please visit it when you have a moment. So we have three revenue sources at RPRA from which we can recover our costs. Firstly, we have producer responsibility program registrants, so Blue Box and HSP residents, that's your category. So we do assess fees to producers that are required to register and report to RPRA under the RRCEA regulations. We also assess and collect fees from excess soil and hazardous waste program registrants who are obligated to register and report through the registries that we operate for those programs. Important to note that we are not responsible for compliance activities related to excess soil and hazardous waste. That's the responsibility of the MBCP, the Ministry of Environment, Conservation and Parks. We also still recover some costs through cost recovery charges to industry funding organizations, which are organizations that helped to run the legacy waste diversion programs. So we recover those charges under the Waste Diversion and Transition Act. A little bit about what the program fees we are consulting on support. They support the delivery of our mandate, of course, and we have some really high-level deliverables listed on this slide. So we develop and maintain registries through which people can fulfill their regulatory obligations by reporting. We operate those registries on an ongoing basis, including supplying support to registrants. And we also are responsible for compliance and enforcement of resource recovery requirements under the RRCEA. We are also mandated and required to publicly report on registry data that we receive and on our own compliance activities, which we do so on our website. And we are also responsible for oversight of the operation and wind up of, as mentioned before, some legacy waste diversion programs and industry funding organizations. And that happens under the Waste Diversion Transition Act. So this gives you just a very high-level overview of our approach to fee setting at RPRA. We do have a general fee setting policy, which you can view on our website, which provides overarching guidance for setting fees. And there are 6 main inputs into the fee setting process. So we have a budget, as mentioned before, which comes from our annual business plan. That's the overall pool of money. And then we have a cost allocation methodology that we use to allocate costs accordingly to different programs that we operate. And then we also have a decision to make about applying any surplus funds received from the wind up of industry funding organizations. We also have an adjustment possible to program budgets to either recover prior year deficits or refund prior year surpluses. And for each program, we have a fee model that determines how and what fee payers within each program will be charged. And then as an input into that fee model, we have an estimated number of both fee payers, so producers, in the case of Blue Box and HSP, and the amount of material that we predict will be supplied by producers in the year in which we are proposing fees. In 2027, we will add an additional input into this process, and that would be decisions around adjustments due to the collection of administrative penalties. We have a very good fees webpage on our website with a lot of information, a lot more detail about our cost allocation methodology and about this overall process. So if you have questions or you want to learn more about this, that's a great place to start. We'll give just a short overview of our cost allocation methodology here. So the methodology distributes our total cost recovery target, which is just our annual budget, so the 2026 budget in the case of these fees. The methodology distributes that budget between programs to fairly recover costs related to each program, avoiding registrants from any program subsidizing costs of another. So we divide our overall costs into two categories. First, we have direct costs, and those are costs attributed to a specific program. They can include registry amortization and interest for a program portal. They can include the program's registry foundational costs, professional fees associated with projects that are struck up for that particular program, and certain IT and registry related expenses as well. Then the other big bucket of costs are common costs that can't be directly attributed to one program because they're either indirect or they're shared service. So these common costs are divided up amongst all the programs using cost drivers, a key one being the number of registrants in a program or the number of producers for the producer responsibility programs. So examples of indirect costs can include the board remuneration, amortization for non-registry related debt, leadership and certain administrative salaries, and office supplies. We also have shared service costs, which include the majority of staff salaries and benefits, IT services and support, and also software licenses. There's also an annual contribution to a contingency reserve fund that's allocated to each program based on the program's share of the total budget. And again, that fees webpage gives more information about this cost allocation methodology should you need it. So we'll pause here for any questions that might have come up during that portion of the webinar.
Great. Thank you, Stacy. I don't see any questions at this moment. I'll give it just 10 seconds here just in case. If there are no questions, that's totally fine. So now I'll hand it over to Cameron Perrick, who is RPRA's Director of Programs and Stakeholder Relations. Thank you.
Thanks, Julia, and great setup, Stacy, to give us great primer on how we set our fees. I'm going to discuss a little bit more of the details around RPRA's budget for 2026, which was recently published a few weeks ago, contained within RPRA's 2026 business plan. So I'm going to start off by sharing some information about what is how RPRA's business plan is developed. We're guided by RPRA's 5 strategic goals, which were finalized in our long-term strategic plan, which is a plan we developed in 2024 in consultation with the ministry and our stakeholders to take us to establish kind of some guiding goals to take us to 2030. Our 3 main pillars of our strategic goals are delivering accessible registry services that provide value to registrants, ensuring effective enforcement that supports waste reduction in a healthy resource recovery sector, and ensuring that RPRA publishes trusted and useful information about resource recovery, waste, and RPRA's activities. We also established 2 more inward-looking strategic goals. We strive to create a connected culture where employees can grow, do meaningful work, and ensuring robust internal systems and processes that remain innovative and adaptable to change. Now, when we develop our 2026 budget and our business plan and all of our subsequent business plans taking us up to 2030, these 5 strategic goals help guide us in establishing our planned activities that we hope to deliver in each year to help meet these strategic goals. Now, in terms of our changes year over year, we've broken out each of our program areas between producer responsibility programs, so those are the EPR programs, digital reporting services, and our WDTA programs. So those are our legacy waste diversion programs that are in the process of being wound up and terminated. Let's start with the producer responsibility programs. There is a budget increase proposed, it's not proposed, it's a finalized budget, but there's a $2.63 million increase, or a 16% year-over-year increase from the 2025 producer responsibility program allocation. This is largely driven by new investments in supporting our Blue Box program. We'll talk a little bit more about what those new investments are related to. There's also lots of detail provided in RPRA's business plan, which is available on our website by following a corporate documents drop-down menu and business plan link out. So we can talk more about in subsequent slides about that investment in the Blue Box program, which is a direct cost. So Stacy described the difference between our direct and shared costs. So this is a direct cost borne by Blue Box registrants because the investments are specific to supporting and operating the Blue Box program. From our digital reporting service programs, Excess Soil and Haz Waste, I know this audience is more focused on Blue Box and HSP, but just highlighting that relatively flat program allocation for those two programs. No real new direct investments, a slight increase in the level of effort related to supporting the HWP program due to estimated higher volumes in activity with that program slightly. Now, big change on the WDTA programs as we anticipate that the remaining programs will complete their final stages of windup, mainly the OES program and the OTS program, which we both expect to be wound up in the coming months, meaning that we'll just have SOs, Stewardship Ontario's legacy Blue Box program to oversight the windup of, where that program operationally winds up at the end of 2025, and they'll complete their final corporate liquidation steps throughout 2026. And that results in lower level of effort to support the oversight of those programs, a shifting of $600,000 away from or revenues that we're not recovering from those programs in 26, which also get picked up by the producer responsibility program spread across all RRCEA programs in proportion to the level of effort associated with supporting them. As Stacy talked about our cost allocation methodology, that's how we will divide up those shared costs amongst the RRCEA programs. Now, in terms of our budget line items, a few things that we'd like to highlight here, and happy to go into further detail if folks have questions. But really, it's salaries and benefits is the largest change year over year, mainly due to these new investments that I alluded to related to supporting the Blue Box program. It's been identified as a need that we need more staff people supporting the Blue Box program, up to 10 new FTEs to support the build out of the audit and verification capabilities, as well as compliance enforcement related to the Blue Box. So that is the most significant increase in our budget year over year. Another key change that we'd like to flag to the audience is a ramping down of our contribution to reserve recovery and RPRA's contingency reserve. So you see a $500,000 or $500,000 decrease in contribution year over year. In trying to find savings or areas where we can provide relief to our registrants and ratepayers. That's an area where we've decided to contribute less this year to RPRA's operating reserve. Okay, I'm going to move forward. And just breaking down that table to a little more visual representation, you see here, salaries and benefits are our largest, our human resources are our largest investment, followed by our registry and IT costs. So that's costs to support and operate the technology solutions, so the portal to support registrant reporting and RPRA's compliance and enforcement work. And then the amortized cost is the kind of third largest piece of our budget. So that 10-year paying back of initial investments to build the registry portals. Okay, now getting into the little bit of the detail of what's driving our budget. And I want to flag it. There's a link here, and when we post the presentation slides to the consultation page, it'll be handy for you to just link out to the business plan and have a review at your leisure of all of the planned activities that RPRA's highlighted in the business plan. But here are a few relevant ones to this group. Some of the investments include building out of the audit verification framework for the Blue Box program. We also plan to conduct a material deduction study to support Blue Box producers and regulatory requirements. This is directly related to one of the recent Blue Box amendments, which carves out the beverage containers supplied away from home. So we have plans to lead a study that will result in the development of a methodology that will be made available to registrants who have interests in applying for deductions, hoping that we create some equity. Folks can use the same methodology as well as those who don't have the in-house resources to develop their own methodologies. This will hopefully reduce burden for registrants who will be able to rely on this resource to support their reporting in the future. We're also planning to increase our accessibility and impact of our publicly reported registry data, both for registrants and the public. So continued focus on getting information out to our website about the programs that we support as quickly as we can and in accessible and formats that are seen as valuable to our registrants. And again, always looking for feedback on how we can improve that area of our mandate delivery. We're also planning to operationalize a Canadian EPR Regulators Forum. So that's that doesn't preclude work that's already ongoing, which includes open lines of communication between ourselves and our EPR regulator partners across Canada, making sure we're talking to those organizations to identify opportunities to harmonize where possible, share best practices, all in support of kind of streamlining the reporting process for producers, for registrants where possible. And reviewing registry procedures to identify opportunities for operational efficiency. So we recognize that there are definitely opportunities to improve the clarity and usability of our registry procedures. So that's a planned activity for 2026 to have a look at all of our registry procedures for those opportunities. Again, with the goal of burden reduction, helping make it easier for our producers to understand their requirements and report required information into our registry. Okay, in terms of the program allocation, Stacy reviewed our cost allocation methodology, and following the application of that methodology, these are the shares of RPRA's budget that each of the programs that we support pick up. You can see that the majority of our budget is recovered through the Producer Responsibility Program ratepayers, followed by, and that's 65%, followed by around 33% of our budget is recovered through revenues associated with the excess oil and HWP registries. 2% of our overall budget is picked up from the WDTA programs, and that will continue to decline down to zero in the coming years. And you can see in the blue triangle there, 33% of our budget is Blue Box, and the HSP budget is or program allocation is 4%, so relevant to this group. Now, in each year, our estimates may not be perfect, and when a program overcollects revenue, that revenue it forms a piece of this program surplus for each of the programs. Now, surpluses and deficits for each program are applied to the cost recovery target 2 years after they occur and may be applied over a span of 1 or more years with the goal of minimizing annual fee fluctuations to the program. So this is an opportunity for registrant feedback. As you can see, for the Blue Box program, our plan is to apply $500,000 of the program's surplus to this year's revenue requirement to help offset cost and reduce fees, reduce the revenue requirement for the program. If registrants have feedback on the amount of surplus RPRA should be applying to that program allocation in 2026, we're happy to hear that feedback. That's definitely a big part of the consultation. And as you can see, uh, we will hold back or propose to hold back $925,000 in surplus to be applied in future years. So that helps to kind of smooth out the volatility or potential volatility, especially as we learn more about the impact of recent blue box amendments, specifically around beverage container supply. It could be helpful to have that surplus for next year to help again create some more predictability in our fee rates year over year. As it relates to HSP, we're planning to apply $110,000 of the program's surplus in 2026 and hold back around $500,000 for application in future years. Okay, this table shares information about previous year's program allocation, how much we uh, uh, decided to apply in surplus that was being held, and the revenue the recovery target, which is really the amount in each year we feel we need to collect and through our fee setting to recover our budget. Now in 2026, you can see the Blue Box program is picks up $9.7 million of RPRA's budget following the application of $500,000 in program surplus. The recovery target for the Blue Box, the oversight of the Blue Box program is 9.2 million, an increase of $2.4 million year over year. And as we noted on the previous slides, that increase is largely driven by those direct costs associated with dedicated audit and verification headcount, as well as investments in a RPRA-led material deduction study. Now, for the HSP program, last year, HSP program did not have any program surplus to apply, or none was applied. Their recovery target was 2.5 million. This year's program allocation for the HSP program is 2.6 million, with following the application of approximately $100,000 of program surplus. The recovery target is approximately 2.5 million, so a very kind of immaterial year-over-year increase of about $7,000. So let's go to the next slide. So just a bit of the breakdown of how we got to that revenue requirement. So direct expenses related to the HSP program declined slightly. The indirect and shared expenses for the program increased slightly. These are driven by two factors. Our overall budget has a slight increase for inflationary impacts, as well as this program's picking up a piece of the WDTA revenue decline. So that's driving $200,000 of new cost for the program. I mentioned earlier that the operating reserve contribution was ramped down this year. So we see about $40,000 less in allocated to that purpose. And with the allocation of $100,000 of program surplus, you have your revenue requirement, as I mentioned, 2.5 million for the HSP program. In terms of the Blue Box program, the largest impact of the budget or change to the revenue requirement is that close to $1.5 million direct investment in audit verification capacity, compliance enforcement capacity related to the Blue Box program and the deduction study we plan to implement in short order, and similar cost impact or program allocation impact due to inflationary impacts and picking up a share of the WDTA revenue decline. Again, similar impact of a lower contribution to RPRA's operating reserve from this program, and following the application of $500,000 in program surplus, you have a final revenue requirement for the Blue Box program at 9.23 million. And that represents a 36% change in the revenue requirement. But we'll talk a little bit more about what that means for fees in a moment. Okay. So we're not proposing a change this year to the fee model for the producer responsibility programs. We will continue with a nominal fixed flat fee for small producers who are fall below program-specific supply threshold amounts. And we'll continue with a variable per kilo fee for all other producers or per tire rate if you're in the tires program. By including variable quantity-based rates, RIPRA's proposed fee model is aligned with the government's objective to hold producers responsible for the products and packaging they supply into the market when consumers are finished using them. The proposed fee model follows RIPRA's general fee-setting principles, which are outlined in our general fee-setting policy. There's a link there. That policy is always available on our website. Some of the principles outlined in our fee-setting policy include equity. Now, the principle is that we want to protect small producers and registrants from excessive burden, ensuring large producers and registrants that pay fees that reflect the relative quantity of material they supply into the Ontario marketplace, and ensure that no producers have a competitive advantage on a per product basis. We also strive for simplicity and predictability. So the per kilo or per unit variable rate fees are aligned with regulatory requirements for producers to report by weight or unit and enable revenue estimates based on estimates of future supply volumes. Now, we thought it might be helpful to share information related to beverage container volumes that have been reported into RPRA's registry. The impact of recent Blue Box regulatory amendments on supply volume estimates, specifically related to the removal of the away from home requirement for beverage containers, have been considered in our estimates. We do anticipate approximately 30% less beverage container tonnage will be reported by producers in 2026. And we're seeking industry feedback to help increase the accuracy of our volume estimates. So if you have, I know these are aggregate numbers across the entire sector, but we're welcoming any industry insights to help us ensure we don't, that we're getting the number right or as close to accurate as possible. So we did reduce our predicted supply of beverage containers to be reported in 2026 of approximately 118,000 tons by 30%. Now, in terms of the actual fee rates, so our fees proposal includes a 5% increase to the flat producer fee, the flat from $95 to $100 for those producers who supply 500,000 or 50,000 kilos or less, or report 50,000 kilos or less. And those producers who fall above supply material in excess of that small producer threshold, we're proposing a 41.8% fee rate increase. And again, that's largely driven by those direct investments in Blue Box headcount, Blue Box dedicated headcount, and the development of a deduction study. So the variable fee for large producers, let's see, so it's driven by a 36% increase in Blue Box program allocation and a 4% decrease in estimated supply time. So that's really important to understand with the carve out of the certain beverage container supplies. This recovery target is going to be spread across less tons, which drives a higher per kilo rate increase. So the overall volume estimation used to determine the proposed fee rate for 2026 is 903 million kilos and is derived from supply reported to RPRA in 2024 and 2025. Okay. Stacy, I'm going to have to turn it over to you for a moment. If you can pick up the presentation, that would be very helpful.
Sure can, no problem. Okay, so this slide gives you a detailed breakdown of the proposed, rather the change in the proposed fee rate for Blue Box. So what you're seeing in the left-hand column are the factors that affect that fee rate, and then it's the percent change in the right-hand column. So the increase to the overall program allocation is resulting in a 31% increase to the Blue Box fee rate. A supply volume change, which is a slight decrease, is resulting in a 4.1% increase to the fee rate for Blue Box. There was a decrease in the surplus applied to the Blue Box budget compared to what we applied for 2025 fees, and that's resulting in a 6.5% increase. There's a theme here. And there's no change as a result of any changes in the number of small producers in the program. So add these things together and we're looking at that 41.8% increase to the fee rate proposed for 2026. Just move the slides along. Thanks. Okay, so we're getting into the HSP program fee rates now. So there's a lot of different fee rates for the HSP program because we have a lot of different material categories and requirements for materials in this program. So you can see at the top, we've got the 3 automotive materials. First is oil filters, and we have a proposed 2026 fee rate of 0.078, so 7 cents roughly, almost 8 cents per kilogram, and that's a 10% increase over the 2025 fee rate. For oil containers, we have a 5% increase that gives us close to 11 cents per kilogram. For antifreeze, there's no change. So we're still looking at the 2.5 cents per kilogram fee rate. For paints, coating solvents, pesticides, and non-refillable pressurized containers, the 2026 fee rate will remain the same at 1.1 cents per kilogram. Then we get into flat fees for producers submitting information to our registry on mercury containing barometers, thermometers, and thermostats. That's category C of the HSP regulation. So that flat fee is increasing by 5%, which is consistent with our increased budget. Same with the fee for fertilizers in category D, the fee for refillable propane containers and refillable pressurized containers in category E. And a reminder that that's a recent regulatory change that resulted in the move of refillable pressurized containers from category B, where it used to live, and it used to be assessed variable volume-based rate, to category E in this flat fee. And then we have category C, D, and E. Any producer business with revenues below 2 million receives a flat fee of $100 proposed for 2026, which again is a 5% increase over our 2025 flat fee in accordance with our budget.
Thanks, Stacy. I can pick it up from here. And apologies, folks. I was in a queue to buy World Series tickets, and Game 1 tickets are sold out. So no luck.
Sorry, Cameron.
That's okay. All right. So
I hope someone
some of
on
the
that call got tickets.
So some of the key takeaways for our HSP program fees proposed for consultation is really that 5% increase in the flat fee for small producers across all RRCEA programs, reflecting the overall budget increase. Our supply data used to calculate the proposed 2026 fee in the supply is the supply reported into the sectors identified for the material type in the 2021 rules for stewards under the MHSW programs, consistent with 2025 HSP fee. So again, no changes to our model. The supply data that we're using to estimate 2026 supplies, which drive or inform our fees, are the average of 2022, 2023, and 2024 kilos reported into our registry as supplied to market for each of the categories that have a variable rate fee. part of the prior year combined surplus of $110,000 has been incorporated and reduced the 2026 HSP proposed fees. The balance of the HSP proposed surplus is around $500,000, and staff are proposing to defer the additional refund pending confirmation of 2025 supply volumes and to provide a source of revenue to support fee stability in future years. So really, this is again an area that we're seeking feedback on, depending on the needs of your business. Kind of if you feel that immediate relief through the application of a higher amount of the HSP surplus is needed in 2026, let us know. You can we'll in a few slides we'll share how you can provide us with that feedback. But our proposal is to hold back surplus to help smooth out the fees in future years and apply it as needed in 2027 or 2028. So our rolling average of supply volumes for the categories A and B materials are predicted for 2026 as paints, coatings, solvents, and pressurized containers have a small estimated decrease in the supplied volume. Antifreeze is remaining steady, estimating no change in future supply tonnage. Oil filters are estimating a decrease in supplied volumes by 10%, and that's really what is driving the increase in that category compared to other categories in HSP is having to spread out the same amount of cost over less tons reported. And oil containers similarly has a 6% decrease in estimated supply. So, folks in the industry who have insights related to these estimates, we'd really like to hear from you to help validate these assumptions. Just some of the breakdown of the automotive materials and the paints, coatings, solvents, pesticides, and non-refillable pressurized containers. What's driving those fee rate changes in 2026? Well, there's a increase in the 2026 program allocation by 4.1% for the HSP automotive materials. We're seeing the impact of supplied volumes, so less supplied tonnage in a category does result in higher fee rate per kilo. Again, same amount of cost, but spread it out amongst less tons. It means every ton has to pay a little bit more. We did see an increase in, I think it was $110,000 in program surplus we're proposing to apply across all the HSP programs, and no estimated increase or decrease in the number of small producers. So we think that that will remain flat. So the total change for the automotive category is a 2.5% fee rate increase. And obviously, as we shared on the previous slide, there is some variability between the automotive categories I'm just going to flip back just quickly with the oil filter category increasing by 10%, largely driven by a decline in estimated supplied tonnage in that category. And for the HSP program, we, similarly, a 4% increase in the program allocation year over year. No anticipated supply volume change across these categories, the paints, coatings, solvents, pesticides, non-refillable pressurized containers. But we do see, same as the other programs, an increase in the surplus applied to reduce fees. And similar to the other HSP automotive materials, we're not anticipating a change in the number of small producers that we're reporting in 2026. Overall, this leads to no change for the fee rates for paints, coatings, solvents, pesticides, and non-refillable pressurized containers in 2026. Okay, slide shifts gears a little bit, but it's the right audience and it's the right subject matter to provide some updates on billing and invoicing for 2026. So effective January 1st, 2026, RPRA will be implementing late fees. So we've always had the authority to charge late fees on unpaid invoices, but we have not chosen to charge these late fees, these administrative fees. But as of January 1st, those who are late on paying a RPRA invoice will be charged a 1.5% administrative charge. More information will be shared in your first billing, so you'll have some information about the late penalties indicated on your RPRA invoices starting in 2026. Now, in response to a great deal of feedback we received across all of our programs on how folks, saw opportunities for improvements in how RPRA collects money from our registrants. So we heard you, and we've made a number of enhancements to our payment processes. So we've made improvements to make it easier for registrants to view and pay outstanding balances and request refund for credit balances. So this is all about the user interface that you'll see launching in November. Just to make it easier to navigate through our payment portal. You'll also now have the ability to pay your total outstanding invoices in each program all at once. This is largely related to those on the HWP programs who might have a number of outstanding invoices. You can now batch them together and pay all at once. You'll now have the ability to designate an accounts payable user. So we heard feedback that the invoices weren't getting to the right person, or at least there were too many steps to get those invoices to your finance or accounting departments of each of your businesses. So you now have the ability to provide, there's new fields that you can indicate who your AP contact is. So when an invoice, RPRA invoice is generated, they'll be provided with notification and be able to review and pay immediately. Your ability to save a preferred payment method for easy use in the future. This is a new feature, including an enhanced direct debit payment method added. So we receive feedback that businesses want more flexibility. Every business operates differently and they have different preferred payment methods. So we've heard you and added that ability to pay by direct debit and to save your preferred payment method. And finally, this is more related to the HWP program, but we may have many HSP or Blue Box businesses that are also enrolled in that program. But we've enabled manifest auto pay. So really, it's once your manifest has been completed, you can set up the option to have it automatic pre-authorized payments for those RPRA invoices related to the hazardous waste program. All right. So we really are interested in hearing back from you about this proposal. If you have feedback, you can send it to consultations@rpra.ca. So all the feedback we receive will be considered in our decision-making process when we go to our board in November to make recommendations on final fee rates for 2026. The final 2026 program fees and a consultation report summarizing all the feedback we received during the consultation. So that includes all the questions we hear today and across all the webinars that we've been supporting, as well as any letters of feedback we receive. That'll be posted to RPRA's website on or before December 1st. And all the stakeholders and registrants and attendees of the consultation across all of our webinars will be notified once the fee rates are posted and once the consultation report is made available. So we're looking for your feedback ahead of the consultation period close on November 13th, 2025. And if it will be helpful, you can request a one-to-one meeting with RPRA staff to help maybe to ask us questions to help inform your final submission of feedback. We're definitely open to that. So if you'd like to make that request or just ask general questions about the proposal, you can send those to consultations@rpra.ca. We've got a few questions in the Q&A window. So before we get to those, I'm just going to hand it over to Julia, who's going to launch a quick survey to help gather your feedback on the delivery of today's webinar. And Stacey and I are going to look at these questions. So over to you, Julia.
Great. Thanks, Cam. Thanks, Stacy. So I'm just going to launch a quick poll. We include this in all our webinars to gather your feedback and help us improve future sessions. The poll will stay open until the webinar ends, so please take a moment to respond when you can. I'll just launch that right now. So that should just pop up on your screen. 7 quick questions. That'd be great. Thank you. Now I'll hand it back over to Cam and Stacey to continue with the Q&A.
Okay, thanks, Julia. I'm just going to go through these questions. They're all really good and good audience to share our responses with. So the first question, thank you, Niku, for submitting your question. They state regarding beverage container collection rates, that is for all plastic bottles. Also, why do you anticipate 30% less tonnage in 2026? Okay, so it's not just plastic bottles, it would be the beverage container category. And if you'd like more information about which materials fall within the beverage container category, I encourage you to have a look at our Blue Box program page. We've got a number of FAQs and guidance documents that would help clarify what is reported in the beverage container category. Now, in terms of why we're anticipating 30% less, at the end, or sorry, earlier this year, the Ministry of Environment, Conservation and Parks consulted on and finalized amendments to the Blue Box regulation. One of those amendments impacted beverage container supplies, which include a deduction or the beverage containers, and this is we're getting into the compliance area. If you have questions about this, I would encourage you to follow up with them. But in summary, beverage containers supplied away from home and not ending up in the curbside Blue Box program are now ineligible. So we need to, in making our estimates of what we think will be supplied, we need to come up with a number which we think will be, the beverage containers that continue to be reported into us, those eligible containers. And based on early industry feedback from the beverage container sector and other producer associations and others who have those industry insights, we've been advised that the impact is likely 30% reduction in beverage container supplies expected. But if you have other information that would help inform that, make it more accurate, we really want to hear that. Okay, any changes for paper producers? I, I would say if you have questions about your obligations, that you should contact registry at rpra.ca and get some support for the needs of your individual business and what your compliance obligations are following the recent Blue Box amendments. But as it relates to fees, I guess the change, which is across all Blue Box producers, is a rate increase of approximately 40%. That would be consistent across all Blue Box producers. But if you have any questions, just going to reiterate, if you have any questions related to your obligations, encourage you to reach out to our registry support team at registry@ripra.ca. Okay, so there's a question about late payment. And I want to thank Christine for your question about paper producers. And Amanda, thanks also for your question. So Amanda says, can you clarify what time frame would be considered a late payment? I would say that information will be clearly communicated on your invoice. Starting in 2026. I don't know that we've landed on that, and that will be part of our board's consideration in terms of how we're going to operationalize that change. But it will be clear on your invoice the timeframes you have to pay your RIPRA invoices and what the penalty will be if you don't pay according to the terms described on the invoice. Sorry, bit of a non-answer, but it will be clear on your RIPRA invoice. Okay, so lots of information to consume. We know our fees are not always easy to understand, but we hope we provided enough information for you to kind of review at your own time. And we do encourage you to reach out to RPRA at consultations@ripper.ca if you have any questions about the proposal or if you have any feedback to share. I'm going to turn it over to Julia. We've got about 5 minutes, so any final questions, please submit them in the Q&A. Otherwise, Julia will close out the webinar for today.
Perfect. Thank you, Cam, and thank you, Stacey, for today. Lots of great information today in this webinar. Once again, thank you for everyone who completed the poll. As a reminder, if your questions weren't answered, if you have additional questions, please email us at consultations@rpra.ca. Thank you again for joining us and have a great day.